Let's bring in former Council of Economic Advisors Chair Jason Furman and Evercore ISI Vice Chairman Krishna Guha. Good to have you both on. Jason, I'm going to start with you. Your reaction to those comments from Gunlock, as we have seen energy prices move higher. We do have D.C. dysfunction. We do have a UAW strike and labor agreements that are yielding higher wages for workers in this country. How does the Fed navigate all this?
Look, I think the Fed right now is in or mode on rate hikes. If we get higher inflation, and that's core inflation, they're going to look through the oil stuff, then you get higher rates. Or if we get, much higher growth or lower unemployment, then you also get rate hikes. The reason they were higher for longer in today's dots wasn't that they were more worried about inflation. It was the other half. They were less worried about unemployment. That gives them a little bit more room to raise rates.
Yeah, it's not so much that inflation is necessarily going to move higher, but that growth is stronger than had been anticipated as well. So, Krishna, it takes us to Steve Leisman gave a shout out to your note, and I do want to get straight to that. This idea of bullish hawkish from the Fed and from Powell today.
So that's right. I mean, as far as the rate outlook goes, rates high for longer. So that's hawkish. But why? Because they're pretty bulled up on the economy. They are extrapolating forward the recent surprise strength that we've seen in the economy, and they are embracing a soft landing story. The economics of this is pretty dazzling, right? They do believe that with rates that only come down very gradually, we can get inflation back towards target without unemployment ever going above 4.1%. Now, if you'd said that to a lot of mainstream macroeconomists, even 6 or 12 months ago, they would have looked at you like you were probably crazy.
So, Jason Furman, what does this mean? What does the setup mean for Q4? Really important, consumer-driven quarter. We're going to be there in 2 weeks in the quarter anyway. Amazon's saying they're going to hire 250,000 people getting ready for that. And we've got strikes happening now in some pretty big industries. What needs to happen in Q4 for the economy to keep threading this needle?
Look, first of all, the FOMC forecasts seem to implicitly be assuming a decent amount of slowdown in Q4. They don't give us their quarterly numbers. They said for the year growth would be 2.1. Given what we know about Q3, which is going to be about 3%, that probably means about 1% in Q4. So they do see a bit of a slowdown there. And you see that also from the unemployment rate rising, not nearly as much as they used to think it was going to rise, but they still have a rise penciled in for next year. In order for us to have positive growth in Q4, which, by the way, would certainly be my forecast for Q4, it's going to require at least some continued strength by consumers, and that to be joined by, a reversal of the declines in business investment that we saw, at least up through the middle of this year.
Krishna, are you expecting the same kind of strong Q4?
I would certainly expect Q4 to be positive. I mean, there are a whole bunch of things that could interrupt the data in the near term. Powell talked about some of these things in the press conference. The auto workers' strike, a possible government shutdown, spillovers, a resumption of student loan repayments. But the underlying trajectory of growth does seem strong. And that, of course, is why the Fed is saying, okay, look, looks like we are maybe going to get that soft landing with only a moderate deceleration in growth, only a slight increase in unemployment. But if we do get that, don't expect early big rate cuts.
Jason, we know it can take a while for all of these rate hikes that we've seen over the past year and a half to work their way through the economy and have full effect. When do we know? When can the Fed or the markets actually claim victory and say a soft landing has been achieved?
I think it's going to be a while before we can be at all clear and declare victory. I also think the degree to which those monetary policy lags are long and variable is greatly overstated. Monetary policy works through a number of channels. One is through the stock market. Well, the stock market's been going up lately, not down. Another is through the dollar. The dollar's going down lately, not up. Another is through mortgage rates. Most of the increase in mortgage rates happened more than a year ago. There's been another round of it lately. But a lot of what's happened in monetary policy, I think, has already worked their way through the system. What needs to bring inflation down now is less lagged monetary policy and more just the underlying dynamics of an economy that I think has room for positive growth, but certainly less room for positive growth than it had over the last 2 years or so.